Okay, the first problem on the list for Chapter 2 is M24. M24 gives us a list of accounts, and it wants to know what type of accounts they are. Where do they show up on the balance sheet? Are they current asset, current liability, non-current asset, non-current liability, or stockholders' equity, okay? So I've listed out the accounts for you. Let's see where they show up on the balance sheet. The first one given to you is wages payable. Wages payable is a current liability. Think about what wages payable means. It means that you haven't yet paid employees, but you owe the employees. What do you owe the employees for? For working. So they've done their work, you owe them their wages, but you haven't yet paid it. Give you an example. Let's say, for instance, you work at a company and you get paid every 2 weeks. Well, at the end of, let's say, the month, we have to produce your financial reports. So financial reports are required regardless of whether or not you've paid the employees, okay? So if that pay date doesn't fall necessarily right at the end of the month, then that means you owe employees for how long they've worked up to the end of the month but haven't yet paid. For example, let's say you get paid on the 16th and on the 1st, okay? Well, when it comes to the 30th or the 31st, depending on the month, okay, and we have to produce financial statements, if those employees haven't yet been paid, but they've worked and they've earned their wages, then the company owes them wages payable. Whenever you see a payable after a descriptor word, okay, that means that you have a liability. It's some sort of liability. Going down to the next one, accounts payable. This is also a current liability. Accounts payable, I have abbreviated here A/P. That's not my abbreviation, that's accounting abbreviation, okay? This is shorthand that I want you to get familiar with. You're gonna see me use a lot of shorthand. I'll tell you usually the first time I'm using shorthand, but from then on, that's how I'll be showing it in the problems, okay? Again, notice it has the word payable after it, okay? Payable indicates that it's going to be some sort of liability. Notice this is a current liability. Both wages payable and accounts payable is a current liability. Why? Because current liabilities are paid before 1 year. So they become due before 1 year is up, okay? Next one is accounts receivable. This is a current asset, okay? Accounts payable means that you owe someone. Accounts receivable means that someone owes you, okay? You have the right to receive cash from them. It's abbreviated here, A/R. Again, this is accounting shorthand, accounts receivable. If you see a receivable at the end of a description word, okay, this was accounts payable. It had a payable, that meant a liability. If you see a receivable after a descriptor word, that means that you have an asset, okay? Accounts receivable is an asset. Buildings. Buildings is going to be a non-current asset. Think about what assets are, okay? These are economic resources that a company has that they're going to use. A current asset means that the company is going to use that resource within a year, okay? A non-current asset means that the company is going to have this resource and use it for longer than 1 year, okay? Buildings obviously offer a lifespan that's longer than 1 year. You don't build a building and tear it down the next year, okay? That's why they're considered a non-current asset. Economic resources, assets, are said to be used to keep the business going, to produce a profit, et cetera, et cetera. This building will be used for longer than a period of a year in order to generate profit. Cash. Cash is considered a current asset. We deem cash as usable within a year, so cash would be considered a current asset. Next is contributed capital. I'll be abbreviating contributed capital going forward as CC, okay? Contributed capital, this is stockholders' equity. Remember that stockholders' equity is made up of two things, retained earnings and contributed capital, and this is one of the two, okay? Contributed capital we get from financing a business, i.e. selling stock, okay? Next is land. Obviously, like buildings, land has a long period of life, more than 1 year, so it's going to be considered a non-current asset. The interesting thing about land is actually said to have an indefinite life, so we don't actually depreciate that. We'll talk more about that in Chapter 9. Coming over here to the next side, we have income tax payable. Notice I've kind of shortened this down here. Income tax payable. Again, see that word payable after it. This is going to be considered a current liability. Why is it a current liability? Why is it 1 year? Because you're going to be paying the government, or the corporation in this instance, is going to be paying the government within the next year. So it's considered a current liability. Next is equipment. Equipment is a non-current asset. Okay? Again, equipment, you buy equipment expecting to have it around for a long period of time. It's what we consider a long-term asset. It's going to generate whatever it is made to do. For instance, if it's made to build a certain product, it's going to generate those products over a long period of time, and then you're going to take those products and you're going to sell them. Okay? So it's said to have a long, useful life, or at least longer than a year, and therefore it's a non-current asset. Next one is notes payable. Notice I've abbreviated notes payable N/P. Okay? Anytime, like I said, it has that payable after it, you know it's going to be a what? A liability. Notice they give you a description of this. They tell you that this notes payable is due within 6 months. So this note is like a contract that you sign. It usually has some sort of interest component with it, as opposed to accounts payable does not typically have interest associated with it. Okay? Notes payable has a principal and an interest component associated with it, and because it's due in 6 months, it's going to be paid back in 6 months, we know it's a what? A current liability, okay? Because it's due before the year is up. In this case, it's due in 6 months. The next one is retained earnings. Retained earnings is stockholders' equity. Remember, I told you that there's 2 sections to stockholders' equity. You have contributed capital and retained earnings. Okay, so retained earnings is the other section. Next one, supplies. Supplies is going to show up on the balance sheet. It's a current asset. Okay. You can kind of think in the back of your head, we can differentiate between supplies and equipment, okay, based upon how long they last. Supplies are things that you also buy that you're going to use up, but you can kind of think of it more as like disposable type things. For instance, if I bought pencils, pens, paper, I don't know, oil that I might grease a machine on to make it run smoother, Post-it notes, etc., etc. Those types of things are supplies, okay? They're not going to be lasting for longer than a year. We're most likely going to use them up within this year or within 1 year operating cycle, okay? Equipment is going to last for longer than a year, okay? Last for longer than a year. Next one is utilities payable. Utilities payable, again, has that payable after it. It's going to be a liability, and it's a current liability. Why is it a current liability? Because you're going to pay, or the corporation in this instance is going to pay its utility bill. Okay, it's going to pay its utility bill before 1 year is up. I think that's all the requirements for M24. Please send me any questions you have.